morning, everyone, and welcome to the July 13th issue of the Tucson Mortgage Weekly. Coming to you from sunny Tucson, Arizona. Had a record heat wave this weekend. We topped out at 107 degrees. So if you think it's hot where you're at, you don't know nothing. Maybe people in Phoenix and Yuma. That's about it. Otherwise, you got nothing on us on heat. Okay, here's what's going on with the news. Last week, weaker dollar improved the trade deficit, which a lot of politicians are taking credit for. But what that did is that actually pushed rates a wee bit higher. Consumer sentiment came out lower than expected, so that ended up typically keeping it under check. So last week we had some significant improvements, but it ended up the week ended up slightly worse than where we started. This morning there's some positive financial news coming out, which is causing bonds to sell off, and so we're seeing pressuring of rates higher. This week there's really no big Treasury reports coming out, and that's excellent as far as I'm concerned, because there's just been a flood of mortgage-backed securities and treasuries on the market, and that absolutely is forcing prices down and raising rates up. So we need to really keep our finger on the pulse of what's going on there. Technically right now rates are actually poised to press higher, and at best we're going to see them move sideways for a couple of days. In my opinion, with no tremendous news coming out in the bond world, I think what we're going to have to do is keep our ears and eyes open for earnings reports. As the stock market, I think this is earnings week, and we're going to see, if we see stocks really showing strong gains, then we're going to see rates pressure up. And like I said, technically the market's ready for an increase in price after some of the improvements we've had over the past week or two. So that's the news. Please make sure to check into TucsonMortgageBlog.com so you'll get all the up-to-date news in the mortgage market. And thanks for tuning in. Bye-bye.